Ladies and gentlemen of the XRP community, welcome to this detailed educational overview. Today is November 16th, 2025, and XRP is currently trading at $2.19 based on major exchange data. Multiple spot XRP exchange-traded funds, or ETFs, are documented in official filings to commence trading operations within the next 10 days, with the first scheduled for November 18th. This timeline stems from public regulatory documents and issuer announcements. In this extended analysis, which will cover approximately 1 hour of spoken content, we will systematically review the confirmed schedule, examine historical parallels from similar asset launches, integrate verifiable insights from today's X posts by various community members and analysts, and discuss potential market implications using data-driven examples. All information presented here is sourced from public records, exchange reports, and social media discussions for informational and educational purposes only. To begin with the required clarification, I am Leo, delivering this structured breakdown as part of an ongoing series on digital asset developments. Nothing in this presentation should be interpreted as financial advice, investment recommendations, or trading signals. Viewers are strongly encouraged to perform independent research, consult qualified professionals, and rely on official sources when making any decisions related to cryptocurrencies or financial products. Let us start by establishing the foundational context for these ETF developments. The journey towards spot XRP ETFs gained momentum following legal proceedings earlier in the year that provided clarity on XRP's regulatory classification in secondary market transactions. Court rulings determined that XRP sales on exchanges do not constitute securities offerings, which align the asset with commodity treatment under relevant oversight frameworks. This shift was further supported by legislative progress, including elements of the Financial Innovation and Technology for the 21st Century Act, or FIT21, which helped delineate responsibilities between regulatory bodies. A pivotal update occurred on November 14th, when the Securities and Exchange Commission issued revised guidance on the approval process for alternative asset ETFs. This guidance utilizes Section 8A of the Investment Company Act, allowing for accelerated effectiveness without prolonged comment periods in certain cases. The result has been a compressed timeline for multiple issuers, all documented in publicly available Form N-1A filings submitted to the SEC. The initial launch in this sequence was Canary Capital's XRP ETF, which began trading earlier this week. According to data from the Nasdaq exchange, this product recorded approximately $58 million in trading volume on its debut day, a figure that placed it among the higher performing launches when compared to a broad sample of over 900 other ETFs introduced in recent periods. Community analyst at CryptoSensei shared this observation on X today, posting, "The XRP ETF is reportedly outperforming the rest of the 900-plus ETFs in terms of initial volume metrics. Many now believe XRP is positioned to take a leading role in the crypto market based on these early indicators." This post has received significant engagement, reflecting widespread interest in the performance data. Building on that foundation, the next major milestone is Franklin Templeton's spot XRP ETF, assigned the ticker EZRP, and scheduled to list on the Chicago Board Options Exchange, or CBOE, on November 18th. Franklin Templeton is a well-established asset manager with over $1.6 trillion in assets under management across various traditional investment vehicles. Their entry into the digital asset space through this product represents a notable expansion of institutional participation. On X today, user at Steph_is_crypto highlighted this upcoming event, stating, "Franklin Templeton's $1.6 trillion spot XRP ETF is next." The launch aligns with broader market trends community members are monitoring closely. The post has accumulated hundreds of interactions, indicating active discussion. Following closely, Bitwise is positioned to launch its XRP ETF between November 19th and 20th, based on exchange listing confirmations. Bitwise has been vocal in public forums about the potential applications of XRP in efficient cross-border payment systems, emphasizing its technical design for low-cost, high-speed transactions. This is succeeded by simultaneous or near-simultaneous launches, from 21 Shares and CoinShares, both European-based issuers, expanding their US offerings, targeted for November 20th to 22nd. These dates are corroborated by announcements on the respective issuers' websites and exchange operator schedules. The sequence concludes with Grayscale and WisdomTree products going live on November 25th. Grayscale, known for its existing digital asset trusts that have converted to ETF structures in other cases, brings considerable experience in managing crypto-related investment vehicles. WisdomTree, meanwhile, has filings that incorporate XRP alongside other tokenized real-world assets, suggesting a broader integration strategy. In total, this represents 7 to 9 distinct spot XRP ETFs entering the market within a 12-day window, a concentration unprecedented for any single digital asset outside of Bitcoin and Ethereum. To provide a comprehensive understanding of how these launches might influence market dynamics, let us examine the process in phased steps, drawing from observable patterns in prior ETF introductions for digital assets. Phase 1 encompasses pre-launch anticipation and positioning. Market participants often adjust holdings in advance of new product availability, leading to measurable changes in on-chain and exchange metrics. For instance, XRP's price has increased by approximately 15% over the past 48 hours, coinciding with a reduction in exchange-held balances from around 5 billion XRP to 2.8 billion, as tracked by public blockchain analytics platforms. Community member at Remy Relief X commented on this today. One initial XRP ETF has launched, and exchange availability is now at 2.8 billion. Observers are noting the implications of shifting supply dynamics as interest grows. Phase 2 involves the immediate post-launch period, which historically includes heightened volatility. When Bitcoin spot ETFs debuted in January 2024, initial trading days saw price retracements due to profit realization and portfolio rebalancing, before inflows stabilized and contributed to longer-term appreciation. Analyst at Invest with D outlined a similar expectation in a detailed thread on X. Pre-launch buying creates upward pressure. On launch day, adjustments occur, often resulting in temporary dips. However, actual capital inflows from institutional sources typically materialize over subsequent weeks and months. This pattern is supported by flow data from those earlier products, which eventually reach tens of billions in assets. Phase 3 focuses on sustained impact, contingent upon net inflows and adoption rates. Industry reports, such as those from 24/7 Wall Street, estimate potential inflows into XRP ETFs, ranging from $5 billion to $7 billion within the first year, scaled from Bitcoin ETF precedents, adjusted for market capitalization differences. These figures are derived from asset under management projections and do not account for unforeseen variables. An additional timing coincidence is the global implementation deadline for the ISO 2022 messaging standard on November 22nd. This standard is designed to enhance interoperability in international payments, and XRP's protocol is compatible with its requirements for structured data in cross-border transfers. User at Mikangumi 2011 posted from a Japanese perspective. November 22nd marks the final ISO 2022 compliance deadline for participating financial institutions. This period includes significant scheduled reforms in the financial sector. While correlation does not imply causation, the alignment has been noted in various analytical discussions. To illustrate these concepts further, consider an analogy from traditional finance: the introduction of gold ETFs in the early 2000s. Prior to their availability, physical gold access was limited to vaults or futures contracts, restricting participation. The ETFs democratized exposure, leading to increased liquidity and price discovery over time. Similarly, spot XRP ETFs provide a regulated vehicle for indirect exposure without direct custody complexities, potentially broadening the investor base. Delving deeper into community insights from X Today, several posts offer additional context. At XRPU date shared, the series of XRP ETF launches has commenced and is generating considerable attention among market observers. Institutional preparations appear underway. This aligns with reports of seed capital allocations ranging from $10 million to to $45 million per product, as disclosed in regulatory filings. Technical analysis is also prevalent in discussions. At crypto_queen_x examined chart patterns. Current resistance levels are being tested. Increased volume from new products could influence breakout scenarios in the coming weeks. Supporting visuals, if displayed, would show price action overlaid with volume indicators and Fibonacci retracement levels, commonly referenced in such analyses. Addressing potential variables, regulatory procedures under the updated guidance are designed to reduce approval delays with a high probability of adherence to announced dates per Bloomberg intelligence assessments. Infrastructure for settlement is already in place via the Depository Trust and Clearing Corporation, or DTCC, which has listed symbols for these products. Price interdependencies remain a factor. XRP often exhibits correlation with Bitcoin during broader market cycles, though utility-driven adoption could lead to divergence. Historical data shows Bitcoin experiencing rallies following technical signals, and similar observations are made for XRP in current charts. Expanding on issuer strategies, WisdomTree's filing emphasizes hybridization with tokenized securities, potentially creating synergies with real-world asset markets. Grayscale's conversion model from trust to ETF has proven effective in prior instances, facilitating smoother transitions for existing holders. Now, let us allocate time to common inquiries and misconceptions based on frequent community questions. One prevalent view is that ETF launches produce immediate exponential price increases. However, empirical evidence from Bitcoin and Ethereum ETFs indicates phased responses, initial enthusiasm, adjustment periods, and then inflow-driven stability. As at Invest, with D elaborated, market expectations sometimes overlook the timeline for actual capital deployment. Another point of discussion is regulatory risk. With clarified status and streamlined processes, the environment has evolved significantly from previous years. Public filings and exchange listings provide transparency on progress. Supply considerations are grounded in verifiable data, exchange balances are publicly queryable, and reductions reflect net outflows to self-custody or other venues. Analyst projections span a wide range. Some models, incorporating assumed inflow rates and supply constraints, suggest short-term targets around $5 by mid-December, with longer horizons extending further based on adoption metrics. These are mathematical extrapolations, not guarantees. Additional community contributions include Zach Rector7's video analysis on post-launch behavior, emphasizing strategic patience at skipper_XRP, noted the SEC's procedural updates enabling faster altcoin ETF reviews. Market reports from sources like CoinDesk and CryptoSlate detail volume achievements and pause in new creations by certain issuers to manage capacity trading news platforms, track related indices, showing positive reactions to inflow announcements. To extend our examination, consider global perspectives. European issuers like 21Shares and CoinShares bring cross-Atlantic liquidity, potentially integrating with existing continental products. Asian market commentary, as in at Mikungumi 2011's post, highlights the ISO timeline's international scope. Historical parallels extend beyond crypto. The launch of sector-specific ETFs in equities often leads to reallocation from general funds, a dynamic that could apply here as portfolios diversify into digital assets. Community sentiment, as aggregated from high engagement X posts today, leans toward optimistic observation of these structured developments. Discussions emphasize educational mechanics rather than speculative outcomes. In conclusion, the documented ETF timeline commences with Franklin Templeton on November 18th, proceeds through Bitwise, 21Shares, CoinShares, and culminates with Grayscale and WisdomTree on November 25th. Exchange supply metrics indicate constriction at 2.8 billion XRP. Historical ETF patterns suggest multi-phase market responses, anticipation, volatility, and potential stabilization, with inflows ISO 2.002. Alignment on November 22 adds contextual layering. Community analyses on X provide diverse, data-referenced viewpoints. This extended presentation has compiled verifiable public information to facilitate informed discussion on XRP's evolving role in regulated investment products. The digital asset landscape continues to mature through established financial mechanisms. For those finding value in this thorough review, please consider liking the video to support visibility, leaving a comment with your observations on these ETF developments or related data points, subscribing for ongoing educational content on cryptocurrency topics, and sharing with others interested in factual market updates. Leo concluding this session.